All right, let's widen back out, bigger picture, with Patrick Mueller, president of Bella Advisor. Thank you so much for joining us today. Let's talk about the landscape and the setup for this year as we're in the first few days of the trading year. A lot of attention is being paid to Trump 2.0, President-elect Trump soon to be inaugurated for his second term. What's the expectation when you think about how the market is perceiving a Trump 2.0?
Yeah, thank you so much for having me. And it's going to be a wild year, in my opinion. And with Trump coming into office, the markets really know what to expect, which is he's going to start deregulating. He's going to start bringing jobs back from overseas. And I think he's going to come in like Miley Cyrus. He's going to come in like a wrecking ball this year. So love him or hate him, there's going to be a lot of change for this year. So just like we're seeing today in the markets, we're going to start seeing trades up until then swinging the markets to position themselves for what especially these big institutions expect moving forward into the new year. But it's going to be a wild ride. Wouldn't you agree?
Yeah, I mean, I agree that we could probably expect to see more volatility because, there in the first term, we saw he would sometimes say one thing and then the next. So when you say we know what to expect, I don't know if that's actually true, especially like when you think about yesterday and some of the headlines that came out that the tariffs would be narrower. This was according to that reporting in the Washington Post than what was mentioned on the campaign or pledged on the campaign trail, but then the president-elect said on social media that's not true. So I feel like volatility might be more of what we can expect. If you're talking about we know what we can expect, would you say that?
Well, what to expect is a lot of change. He's, in my opinion, he's going to come in and he's going to be deregulating. He's going to be pushing for cutting taxes. He's going to be, making pro-business moves and, pro-U.S. moves, right? Opening up energy in the U.S., opening up more oil production. So from his previous administration, that was pretty much the path that he was on. So from that standpoint, we can expect a lot of change. And with that change, we're going to expect a lot of volatility this coming up year. And when it comes to the overall markets, we've had, 25% plus markets the last couple of years. And in my opinion, it can't sustain for too long. But I think we're going to see some big swings because I think there's going to be a lot of changes. The markets are not going to like that for a period of time. And I mean, I think it's, we're going to be, hitting maybe around half of what we've been hitting in the S&P for the last couple of years.
Okay, and when you think about what the market will be paying attention to, obviously today the move in bond yields matters, and that followed that economic data that we got out, which worries investors, it seems, about the path for inflation. And are we going to see a more hawkish Fed, or how far down the line does the rate cutting campaign get pushed out? What's your expectation for the Fed's path when it comes to rate cuts this year?
I feel like they're going to stay pretty close to what they have stated previously. I think we'll see 2 to 3 more rate cuts this year. I don't see the treasuries falling below 4% this year. And so from that standpoint, I think we're not going to see too much volatility in the markets because of that. But, I don't think that's going to be great for the bond market so much this year. It's been, bonds have just not been a great place to be, right, for probably the last 4 or 5 years now. And moving forward, that can be a good short-term thing. I mean, we're getting good yields. We work a lot with folks who are retired, so they need these yields from money markets, and getting 4+% yields in money markets and things of that nature they like. But I don't see there being too much, in the waves as far as we hope inflation stays down, right? It's been a crazy ride for the last few years. I mean, you talk about inflation, and you feel it more than anywhere at the grocery store. And seriously, Taco Tuesday, and I got stuff to make tacos for my family. Granted, we have a family of 6, but seriously, it was like $66 just to get stuff to make tacos at home. So inflation is definitely going to be a factor that's, gonna, to me, with consumer spending for last year, people are just holding on to their money right now. And it could be because of the price of goods and services going up so much. But we hope that inflation stays down. But I think there's going to be a lot of pro moves coming forward that's going to help with that, especially with helping bring energy costs down.
Patrick, I'm glad you mentioned a little bit of the personal component there, because I was actually going to bring that up when you think about inflation, because I was recently looking at, produce prices, et cetera, and I saw eggs again at $8. I do not want $8 eggs again. I want to talk to you a little bit about those sector expectations. Let's talk Mag 7 first. Is your expectation that they will continue to be an outperformer or leader this year? And is there any concern about risk to that, especially when you think about the valuations? They're a little expensive now.
They are. Tech is high. Tech is high right now. So, it's hard to bet against, for an example, like Amazon. I've got packages showing up on my doorstep from my wife and my kids. And if that has any indication of where Amazon stock is going to be going, I need to be buying some more stock moving forward. But the prices are really high right now, and for a reason, because we're going to have to pay to get that growth. We're going to have to pay the premium to get that growth. But I think that the Mag 7 is going to continue to be pushing things moving forward, especially companies like NVIDIA with their AI, and they're so far ahead in the AI. I mean, over the next few years, they're just absolutely going to crush it. And the tech sector is probably our biggest sector that we're looking at for this year, just because we have such great earnings that are coming from the tech sector, and this got so much momentum moving forward, and especially with a lot of things that's happening in the tech sector with data centers. We're in Atlanta here. We're in the Silicon Valley of the South now. It's crazy. We have all these tech companies here now. And we're seeing all these massive data centers popping up everywhere, and electricity demand is twice as much as what's needed right now. And so you've got a lot of infrastructure that needs to be put into place for utilities and nuclear power for these plants. So like those sectors before, they were one of the top performers for last year. So we're very excited about the tech sector moving forward, even though the pricing, like you said, it's pretty high right now. And a couple of the other sectors that we like as well is industrial and also financials. And that's going to be because of a lot of the deregulation that I anticipate happening this year with this new administration coming in, with cutting banking regulations, reserves on banks right now. And I think that's going to create a lot of mergers and acquisitions, and also IPOs that we just haven't seen a whole lot of that in the last few years. But hopefully we start seeing that moving forward into the future. And then the same thing with industrials, with the regulations overseas and trying to bring jobs back from overseas, and people wanting to manufacture in the States. Like I just bought my wife a new Ford Bronco, so hopefully that helps stimulate the economy here in the U.S.
All right. I do expect us to see more M&A activity and IPO activity this year with this incoming administration. All right. We'll have to leave it there, though. Patrick Mueller, president of Bella Advisors, thank you so much for joining us today.